So today was a serious market sell-off, wasn't it? Uh, let's look at how bad it was. All right, the Dow's down 559 points. Wow, I don't remember the last time the Dow was down that much. I mean, well, we could take a look. This is just the Dow starting much higher, and then 551 points higher. Um, and I want to just see how bad the Dow's done. I like FinViz, but I just wanted, like, I literally just want to see how bad the Dow's done over the past year, and we can try to correlate events, right? I mean, look, it's cyclically fluctuating, right, since May. I mean, that seems like the norm for the Dow, and the Dow is really just, you know, it's down a bump today, a noticeable bump, but there's been many days when it's been up much higher, right? So, and overall, the Dow's increasing. Okay. Uh, but let's take a look at the Nasdaq, right? Nasdaq is the interesting beast, and really, what the issue is that tech stocks, the tech stocks are overheated. You've been hearing it for a long time, and people are basically, tech being the growth stocks of the industry. People are getting out of it, getting out of tech now, right? Um, they'll get back into tech. No one, and we'll go and watch the BlackRock guy that we're about to take a look at, talk about that. But I mean, the Nasdaq is basically, uh, Nasdaq fell somewhat today, right? Um, and over the last, I mean, it was due for this, right? This market correction. But when it corrected, if you notice that it didn't correct too much below the actual high, right? And remember, Nasdaq is the all pretty much all the tech stocks, right? Now Russell steadily been going up. Today had a downward correction, not as big a downward correction because the day before the downward correction was pretty high, but you can kind of tell that, like, I mean, overall, it's been expected to go up because we know that the Russell 2000 is, consists of the smaller stocks, right? And then the Nikkei, nothing to talk about there really, but really the Dow's underperformance today, and just the stock market in general, is like what we want to keep in mind. So we'll go back and let's go. Let's, like, find out why people, you know, uh, what people, where they want to go. I mean, if you just look at the heat map here, right? All tech is down. That's all completely red, right? Which, and I mean, you see a few tech companies that are barely red, but I mean, Apple is down 3.48%. And Apple's strategy is basically not to do anything radical. I think most tech strategy right now is not to do anything radical and just ride it out, because they will bounce back. But let's go back to Dow lower for the first time in 5 days.
Away from technology. Is that the biggest?
Okay, let's make a comment here. What's going on with this guy's face? He's the spray tan. I mean, why is the spray tan still a popular thing? I don't understand. I mean, maybe it's a sign that you're rich, a very tacky sign. Okay, but if you're gonna do a spray tan, why are you wearing these big ass goggles? I mean, maybe you are to protect your eyes, but I mean, like, is the contrast? Will it normalize over time? I don't know how spray tans work.
Risk space in the market if rates continue to go up?
So I would say no way. I would say there are parts of technology, and we've rotated. I think others have rotated where you own technology. Listen, the semiconductor space, AI, cloud-oriented data assimilation. Boy, there is. I mean, I literally just got off a call going through another extraordinarily newly developing technology that is going to change how commerce works in another way. So no, I'm not worried about it. By the way,
I mean, of course, like, he's making sense, and this is nothing new here. Like, I mean, it's strange to me that people, like, decide they want to float out of tech, and the way that people emotionally invest is pretty crazy. I just would love to be in some of these emotional investors' minds when they look at the tech stock and they're like, "Oh, time to buy, get out of tech." I mean, we aren't at a profit taking point, I don't think, in tech right now, right? I mean, maybe it was a bunch of people taking profits, but I feel that there was a lot of people who were also just, upset because, like, now it's the time for the great rotation, right? Rotating back into the small caps, and but people are just probably been steadying their money out. But whenever there's a big drop like this, I feel that there's something that precipitated this drop. And I mean, we could go into politics and find out what, but
take companies that are growing that have got 20% growth rates and say, gosh, I'm going to rotate in stuff that's not growing, but it's underperformed thus far. As a long-term, as Tiffany says, a long-term investor, good luck with that. I love technology. That being said, we have also kicked out some of these names that when you look at the portfolio, say, my gosh, what has happened? We should be prudent around some of these multiples. On when you trade at 10 times revenue or higher than that, boy, it's pretty hard to work your way into that multiple, even if you have a 5-year runway.
Who's trading at 10 times revenue right now? I've got a lot of tech stocks. I mean, a lot of tech stocks do, right? Like a lot of tech companies do, because tech companies typically don't make money off their stocks, right? Like, or they're not net revenue positive.
So let me ask you this, and perhaps then it's way more nuanced than just suggesting that technology as a whole is going to have a problem. But can the NASDAQ and these other technology stocks that are not egregiously overvalued withstand a rush to the exits from the ones that are?
Now that is a good question. Okay, so remember the NASDAQ is a composite index, right? And like if you look at the components of the NASDAQ, right? Components of the NASDAQ, you will see the NASDAQ 100, and it has the weights, but like you'll see like I mean, there's literally there's the top 30 components you have in terms of price, right? Like I hate that like you can order some things and like some things you can't on some sites you can't. Yahoo Finance, I thought for sure you'd be able to order the stocks, historical data options summary. I just want to get the components in an price order list. Is that so much to ask? I have no idea, probably. Let's go to the NASDAQ futures. Components of the NASDAQ. We're going to find a site that's going to work for us. Slick charts. Let's find slick chart. Okay, there we go. Good enough. Now, look at this. Apple is the most overweighted NASDAQ stock, right? Without a doubt. Its price is down, okay, and it has been going down. I would love if this list showed the PE ratio, so we could just see the price to earnings ratio of Apple. Now I have to open another tab to do that. Oh boy, I'm spoiled. Okay, so as you could tell, like the price to 33 and 27, right? The forward PE ratio. I mean, that's crazy, right? 20 or 26, about 27. I mean, they're way. I mean, one would consider them overvalued for sure by any standard, right? And other tech stocks, let's see, Microsoft, right? Microsoft for sure has to be overvalued. Yeah, 34 to 29. Look at that. People are really and then like without a doubt, look at Amazon. Insane, right? People are just the price for what they earn, and they earn a lot of money, right? Their earnings per share, $41.75, okay? But the thing is, the stocks that he's talking about that, are really underperforming, I feel that they go, they trend towards the lower weight in the NASDAQ. And I feel he means like he's going to get rid of maybe eBay, right? Like, what have they done recently? I'm sure if I find some eBay news, it's not worth going down the rabbit hole that they're not going to. They're overvalued. 16 and 12, trailing and forward PEs are definitely overvalued. Okay, and I mean if we even were to put like your standard stock indicators, right? Like look at that. I mean this trending channel here that I'm just making up out of nowhere will kind of just show you like that. I mean it's been going up, but like I mean look at the time frame, right? Okay, it's recovering. We're in recovery mode. This is from all of time. Okay, so anyway, what I'm trying to say is that we gotta find out what stocks are really causing the tech to the Nasdaq to suffer, and just eliminate the dead weight. Okay, that's important, and that's what I think that he's getting at.
So I mean, I think so. I mean, I think talk about what we do in our portfolio and a lot of big investors do in their portfolios. Gosh, you try and take out the places that have become what I would say fluff in your portfolio in terms of where they stand from multiple point of view. And yes, you definitely can withstand it. And by the way, I think a lot of places have talked about this. We've done, I think you talked about it last time on the show where I said you guys do some great diligence. We've built a lot of cash in our portfolios. We've eliminated all the interest rate products, the intense interest rate products, treasuries, agency mortgages, some of the investment grade credit.
So basically, they've gotten rid of a lot of long-term bond-like investment vehicles. They've got rid of anything that just pays off with yield. Well, selling off the bond. I mean, that's interesting because I just recently was listening to a CNBC video about how we should not ignore the bond market, right? Or the Fed's trying to rally in the stock market to come in line with interest rates, but at the detriment of the bond market, and people are not having it. People want essentially people want growth right now, right? But the thing is, can we withstand growth? That's the question.
Build some cash and take advantage of when the market goes through these points of turbulence to get back into some of these things. So yes, I unequivocally.
Have you been doing that? Because we had that conversation. I think, I don't know, maybe it was 3-4 weeks ago. We had that very conversation, how your cash level had gone up. And I think you said, I'm trying to remember correctly, I think you said you had taken some profits in the FANGs.
Correct. We have added back some.
He took some profit in the FANGs. Okay, so they're selling off some, he's saying he's really bullish on tech, yet he's talking about selling off some of the biggest representations of tech, the FANGs. So, what is it? And I guess you can say that maybe he's being called out here a little bit, or at least he's being tasked to explain his actions in terms of reserving where he's obtaining the cash for BlackRock, where Rick Rieder is obtaining the cash for BlackRock.
Which has been unfulfilling heretofore. We've added back a little bit. We've definitely added, including yesterday, some in the semi-space. But I would say net, the bigger ads we've
semi-space.
made.
Well, semi-space, why? Well, I guess maybe quantum computing. Even if semiconductor is going to be the substrates for quantum computing, I don't know.
I think Steve said this, or maybe Rob said this. We've added to financials. We've added, we like the cyclicals and we like the consumer space quite a bit. But the ads have been bigger there than in pure technology.
Interesting.
It's interesting. Like he just said that you shouldn't go crazy over the cyclicals. He said you should. It seemed like he was saying you should stay in tech, and that you shouldn't. People should avoid being too nuts. But he just mentioned that he went into the consumer space and started going into the cyclicals. So cyclicals being the products that have their stock price vary based on the season, right, or based on some other kind of season that's outside of this traditional yearly seasons.
Yeah,
on St. Patty's Day.
Go ahead, Rick. Then Steve, I want you to get in.
There's this knee-jerk reaction that people have when they say rates go up and real rates go up, and I think if people take time and think about where things like technology are, and you think about where they were, where real rates were, markets like to focus on rate of change. And I think people are misinterpreting how much this moved. It's a big move that happened so quickly. But boy, oh boy, real rates are still negative. There's only been.
So I feel I can agree. I have this sine wave of alternating agreeing and disagreeing with the Rick Rieder here. Yeah, I mean the rates have been low for a long time. The Fed has really kept the rates low. I mean he's saying negative interest rates still. And he talked about, you have to think about you can understand his decision to dump interest rate products because interest rates are low and, people are talking that this dip, a dip like this and subsequent dips like this would indicate recessionary behavior, which means that interest rates would typically rise, right? But the thing is, in this case, well, I mean, it depends on what the Fed does, right? It's a very confusing situation we have going on now. But the situation, what he's describing, what Rick Rieder is describing, is that interest rates, there's no need to assume that interest rates are going to go higher at this point, right? And there may be a distaste for interest rates going higher.
one time in 21 years that they've been negative. I think it was in 2012, 13 for a brief period of time. We're still in pretty incredible times. So anyway, part of why I think perspective makes a difference.
Absolutely.
CNBC Business Worldwide. So basically, what we should understand here is that we need to, we have an uncertain market at this point, and we've got to consider, what's happening with tech stocks, and we should generally, and the job numbers that were posted that were pretty bad for the year, which were lower than expected, it was presumed that they were going to be low anyway, right? So we should just really think about where we are economy-wise before we start making drastic moves. And again, I've made some videos about how the cyclicals and all the recovery stocks, like why GameStop is really high today, right? Why GameStop is uncharacteristically high again, and it could have been related to the same thing. I doubt people are still short selling GameStop, but look at this. Just take a look at what happened. Back to 108 from this was crazy, like 480. But there's no reason to believe that it's going to follow the same price action. I'm wondering actually now, because paying attention to Wall Street Bets, you can see what's happening with AMC. AMC, another distressed stocks. You can even maybe call these the distressed stock indicators, right? They were also under attack by, I think, also Melvin Capital, or was it another hedge fund? But they were under, they had a short interest, heavy leverage short interest against them, and they were essentially the hedge funds suffered. They were squeezed out by the Wall Street Bets people coming in and still coming in. I could show you even my phone and Reddit. Just the feed is crazy. Like, let's look at actually Wall Street Bets. Wall Street. We should just do a periodic Wall Street Bets check. I think that's just, oh, look at their own wiki. I don't know how long they've had their own wiki for, but Wall Street Bets Reddit. And, we should just be able to go on and let's just take a look at what they're saying here. Anyone can go on. Let's interpret. I like interpreting. What are your moves tomorrow? Okay, well, I want to know, like, how good at, predicting what are your moves tomorrow, this part of Wall Street Bets, is at kind of determining where the market's going to go. Because how powerful are they right now? Assume that after the January GameStop fiasco, they managed to consolidate a lot of power and a lot of resources, and they've managed to, a lot more people are here. I'm only managed this account recently. I've been tweeting ticker mention data from the sub, so Twitter has an unbiased look at what we're up to, so we'll occasionally use to roast the stupid effing MSM for reasons. I don't like Twitter either, but I found only these ways can fathom the contact us. Okay, higher traffic, giraffe snatch. Okay, right. So, you have to get used to the lingo, right? Thank you for the great question. When I was a boy in Bulgaria, I like it. That's what's his name again? The GameStop guy, the Wall Street Bets guy, Foxy whatever, Sugar Plum Fairy. I forgot his name. Anyway, well, looking at Wall Street Bets, I just right now can't determine what we're kind of hoping, but if I could think and guess where the market's going to go tomorrow, I feel that we're probably in for recovery of some kind, a mini recovery. I don't see multiple days of the Dow really going down, and whether that's powered by, just the overarching money pouring back into the distressed stocks, or whether it's, something else that's just stimulating the economy to go up. Maybe Fed drops QE right now and they start, increasing their portfolio again like they've been doing aggressively for the last how many years. We'll find out. Whatever's going to happen, we're going to find out what's going to happen tomorrow. I know that's not a real answer. Okay. Well, that's enough for today. We've checked out Wall Street Bets, and I'm going to check it out again tomorrow. I think I've probably given enough blathering about what's happening here. And with that being said, you got to stay long on tech. What can I say? The innovation in the world, whether you like them or not, it comes from tech. And actually, I'm going to remind you, this is not financial advice. I'm not an investment advisor or professional, so don't listen to what I say. Okay? It's just for information and entertainment purposes. See you around.